We're joined by Arvind Sangar, Managing Partner of Geosphere Capital. Arvind, thanks so much for joining us this morning. Your initial comments on the measures that have been announced by the PBOC chief in what is not normally something that is done, an off-cycle press conference.
Absolutely. It sounds like there seems to be finally some recognition on the part of the Chinese leadership. And to be perfectly honest, it's the leadership in the case of Chinese decision-making that drives the decision that the central bank or any other body makes. And so I think there's recognition on the part of the leadership that things are, going from bad to worse, and they needed to take significant action. And I think there are three different things, if I have understood it correctly. One is a reserve requirement cut, another is a cut in the repo rate, and the third is something on the mortgage side. So I think there's some serious, I don't know if it's a big bazooka or it's a medium-sized bazooka, but it certainly is a very important step on the part of the Chinese to try to revive the animal spirits and to try to get the economy, from slowing down too much as it seems to be doing otherwise.
I mean, it's a little confusing only because the PBOC met towards the end of last week and it kept the policy rates unchanged, and just, 3 days later, it's announced this measure that you said could well revive animal spirits. Why does there seem to be this hesitance to bite the bullet?
I'm not sure any of us outside observers are any more able to understand how Chinese decision-making is operating. Because to be perfectly honest right now, it is all about one person, President Xi, and it doesn't seem like it's a collective decision-making anymore. In the past, in Chinese economic policy making, let's say 5 or 10 years back, there were much clearer signals as to how policy would unfold. Now it seems like it is when President Xi gets convinced that by his other officials what needs to be done, and he gets convinced, then suddenly things are put into place, and that's what it seems to have happened. That with the economy sliding quite notably, I think the decision has come from the top that maybe they need to take corrective action, and maybe that convincing wasn't done before the PBOC meeting last week. So it's clearly, signs, I don't know if the right word is panic, but certainly concern in a meaningful way.
Arvind, from the outside in, there seem to be more global voices, global investing voices that are now saying, look, we're no longer looking at China. We don't think that it's going to revive very quickly. And so from that perspective, they're looking towards other markets. And they've said that India looks attractive despite high valuations. Do you hold to that view as well?
Yeah, look, China has many problems. Many of them are related to demographics, and others are related to a housing bubble that is, slowly bursting. None of those problems can be fixed by stimulative action, and I think you have in President Xi a person who is fundamentally central planning and central decision making, and not as much about free enterprise. None of those things are going to change structurally. But does that mean that China cannot have a valuation and a oversold rebound because things get less bad and start to get a little bit less, less bad and a little bit better? Yes. So if you ask me, for 1, 2, 3 months, could China outperform because A, it's very cheap, and B, it's very oversold? Absolutely. But if I were taking a 3, 4, 5-year view, even a 1 or 2 year view, the underpinnings of the Indian economic growth are much more robust and sustainable, and China's, I think best we can hope for is, things are very cheap from a valuation standpoint, but the economic growth is going to remain sluggish, but maybe not as sluggish as it was looking without these recent without the interventions from today.
Okay. Arvind, do I interpret this, and this is the last question from me, do I interpret that as saying that in the near term you'd be looking for opportunities where you see them, the Indian equity markets, of course, long-term bullish, but you'll be looking for opportunities for dips before you deploy in a big way? Would that be the right interpretation?
Not necessarily dip. I don't think India has to sell off because China is doing well. I think the sectors that do better, even in India, in a China stimulation would be, globally facing metals or other sectors that could benefit from a China stimulus. So I don't think it's a question of if China is going up, India is going to dip necessarily. But it could be that China, on a relative basis, outperforms. But I don't think I'm looking for a dip. It just could mean maybe rethinking about the exposure within India and which sectors might do a little better if China is less bad.
Right. Thanks so much, Arvind, for taking the time for speaking to us this morning.